Hey people, I welcome you back. This is the last of the accounting ratio questions, last edition of the accounting ratio question solving sessions in our channel for this term. Now I've got some questions that cannot be classified as a particular ratio type of question. This involves knowledge of you having knowledge of all the ratios. So we'll look at one by one. All of them are mostly, almost 90% of them are theory questions. Sometimes theory questions can be tricky. I'll try to solve to the best possible level. Let's see what happens. Second question. First question was completely wrong, so just ignore it. Which of the following group shows that high ratio is better for the company? You can debt equity ratio you can remove from the equation because debt equity ratio higher in the firm ku kadan adhigama irukku equity kammiya irukku artham, so that cannot be the true. So abdina A B C moonume poidum and D will be the correct answer. D la enna irukku current ratio, quick ratio, interest coverage ratio. All of these are good for the firm. Yeah, so fourth question, which of the following is correct? Profitability ratios are calculated to know how efficiently a company is using its resources. How efficiently a company is using resources அப்படின்றத கண்டுபிடிக்கிறதுக்கு தான் நம்ம turnover ratios or activity ratios வச்சிருக்கோம். Profitability எப்படி நல்லா இருக்கா இல்லையா அப்படின்றத கண்டுபிடிக்கிறதுக்கு தான் profitability ratios வச்சிருக்கோம். So A is wrong. Activity ratios are calculated to measure the profitability of the firm. No, it is measured to calculate the operational efficiency of the firm. So A, activity ratio on the operational efficiency, profitability ratio on the profitability. So A and B abhi swap panikalam. Solvency ratios are calculated to know the ability of a firm to meet its short-term financial obligation. Solvency ratio on the எவ்வளவு சால்வெண்டா இருக்கு ஃபார்ம், லாங் டேர்ம் ஃபினான்ஷியல் ஆப்ளிகேஷன்ஸை மீட் பண்ற அளவுக்கு அசெட்ஸ் இருக்கா இல்லையா அப்படின்னு கண்டுபிடிக்கிறது. ஃபார் இன்ஸ்டன்ஸ் டெட் ஈக்விட்டி ரேஷியோ, ப்ரொப்ரைட்டரி ரேஷியோ, டோட்டல் அசெட்ஸ் டு டெட் ரேஷியோ அதெல்லாம். ஸோ ஆப்வியஸ்லி C is also wrong. Then D has to be correct. D என்ன liquidity ratios are also known as short term solvency ratios. That is correct. ஷார்ட் டேர்ம்ல சால்வெண்டா இருக்குமா இல்லையா அப்படின்றத சொல்றதுதான் liquidity ratios. So D is the correct answer. Fourth one, if dash ratio is higher, it is considered better. And we have debt equity ratio. The ratio is important for and meaningful to the debenture holders and lenders. Debenture holders and lenders ku வந்து எந்த ரேஷியோ அதிகமா இருந்தா நல்லா இருக்கும்னு கேக்குறாங்க. டெட் ஈக்விட்டி ரேஷியோ அதிகமா இருந்தா டிபென்ச்சர் ஹோல்டர்ஸ் தலையில கை வச்சுட்டு உட்காந்துருவாங்க, ஏன்னா ஈக்விட்டி கம்மியா இருக்கு, டெட் அதிகமா இருக்கு. ஸோ ஏ ஆன்சர் கிடையாது. Current ratio, quick ratio, debt lenders they don't care about current ratio or quick ratio. But B, interest coverage ratio. Interest coverage ratio talks about the number of times the profit is available to cover the interest payments. So interest payment yaarukku pohum, debt lenders and debenture holders ku pohum. So interest coverage ratio da question number 4 ku correct answer. What can be the fundamental measures of operational efficiency? Operational efficiency in sonale activity or turnover ratios. So inventory turnover ratio and working capital turnover ratio. Match the following. Equity. Capital employed na equity plus debt. So capital employed minus debt da equity. So 1B la ஒரே ஒரு choice இருக்கு. B for ball. So அதுவா தான் இருக்கும். working capital current asset minus current liability. 2A equity. மூணாவது ஈக்விட்டி கொடுத்துருக்காங்க. This question is funny man. இங்க ஈக்விட்டி இருக்கு. revenue from operations minus operating costs will give you operating profit. இருந்தா choice B is the correct answer. Right, இந்த மாதிரி நிறைய questions வரும். Don't get demoralized. Proprietary ratio. Proprietary ratio na equity divided by total assets or equity divided by equity plus debt. So 1B, proprietors fund divided by total assets. Inventory turnover ratio, cost of revenue from operation divided by. So 2A, 1B, 2A என்ன இருக்கு? A, option A is the correct answer, my dear children. And return on investment ki dhaan the formula. So correct. All right, children, moving forward, which one of the following is correct? A ratio is an arithmetical relationship of one number to another number. Sounds correct. Liquidity ratio is also known as asset rest ratio, correct? According to NCRT, liquidity ratio or quick ratio or asset ratio mean the same thing. Ideally accepted current ratio is 1:1. That is wrong. Ideally accepted current ratio is 2:1. So this is wrong. 3 is wrong. So 3 இல்லாத ஏதாவது choice இருக்கான்னு பார்ப்போம். ரெண்டு choice இருக்கு 3 இல்லாம. D. Debt equity ratio is a relationship between outsiders funds and shareholders funds. That's true. So 4 is also correct. So 1, 2, and 4. B is the correct answer. B for ball is the correct answer. All right, moving forward. Assertion reason question. Oh, these guys have framed assertion reason questions in a very funny manner. I hope this one is good. Ratio analysis is an indispensable part of interpretation of results revealed by financial statements. It's very true. It helps us understand in relation to various things and compare with other organizations over a period of time. So A is true. Ratio analysis is a technique which involves regrouping of data by application of arithmetical relationship through its interpretation is a complex matter. I don't know what is complex or what is not complex. Anything is complex. For a LKG student, ABCD is also complex. So very generic questions. Such questions should not be asked. Definitely not the. I think as per the answer key, the B was the correct answer. B for ball was the correct answer. Yeah, let's assume ratio analysis is complex. I think it's given in an NCRT. Given below are two statements, one labeled as assertion and the other labeled as reason. The limitations of financial statements also form the limitations of ratio analysis. That is true. Because financial statements ratio analysis numbers we are taking. So whatever disadvantages financial statements have, same disadvantages ratio analysis will also have. Since ratios are derived from financial statement, any weakness in original. Oh, that is the reason. Amazing. So A is the correct answer. Both A and R are individually true. And R is the correct explanation of A. Okay. Ratio analysis under financial analysis is significant as it ignores qualitative factors, helps in window dressing, does not require any standards, helps in locating weak points of the firm. D for dog is the correct answer. All the other things, no, they are all limitations of financial statements or ratio analysis. So all the other things are not there. D only is the correct answer. The following group of ratios are primarily measure risk. Liquidity, activity, and inventory. Liquidity, debt, profitability. Liquidity, activity, profitability. Liquidity, activity, debt. So this cannot be there without profitability. Because profitability is also a measure of risk. B has activity ratio and inventory ratio. B can be eliminated because inventory ratio includes activity ratio. So this cannot be there. Activity refers to operational efficiency of the firm. So this cannot be there. This cannot be there. I think this is the answer. Liquidity, debt, and profitability is the answer. Okay. As per the answer sheet, also D for dog is the answer. Written on the side. The dash ratios are primarily measures of return. Profitability. Return means how much you're getting back on what you invested. So profitability is the correct answer. 14. The dash of a business firm is measured by its ability to satisfy its short-term obligations as they become due. Solvency or liquidity. I'm sorry, not solvency. Liquidity ratios. That is the exact definition of liquidity ratio. Ability to satisfy short-term obligations as they become due. 15. Dash ratios are measured of the speed with which various accounts are converted into revenue from operations or cash. Activity ratios. The operational efficiency, the number of times it gets converted into cash, whatever activity you're doing. So A, 15A is the correct answer. 16. Dash ratios provide the information critical to long run solvency, long run solvency, long run operation. Firm has to be solvent. Solvency ratio. 16C. Accounting ratios and a repeated question. Higher the ratio, the more favorable it is. Does not stand for. Gross profit ratio is high, we are happy. Net profit ratio is high, we are happy. Operating profit ratio is high, we are happy. Operating ratio is high, we are sad because operating ratio measures the operating cost divided by revenue from operation. You want the operating cost to be low. So higher the ratio does not stand for is better, does not stand for C, operating ratio. Which ratios are complementary to each other? Operating ratio and operating profit ratio. One increases or the other decreases. Which of the following is not a type of activity ratio? Debt equity ratio is a solvency ratio. It is not a type of activity ratio. 21. Dash ratios are a measure of the speed with which various accounts are converted into sales or cash. Activity ratio. Activity ratio talks about the number of times it gets converted into cash, all the activities done, trade receivables, how many times it gets, how often, how soon it gets converted, how delayed it is in getting converted, all those things. So activity ratio. Which of the following statements are true about ratio analysis? Ratio analysis is useful in financial analysis. Wow, A is correct. Ratio analysis is helpful in communication and coordination. B is correct. Ratio analysis is not helpful in identifying weak spot. C is wrong. It is helpful in identifying the weak spot of the business. C is wrong. Ratio analysis is helpful in financial planning and forecasting. D is correct. So A, B, D. Answer is A. 23rd question. Profit for the objective of calculating a ratio may be taken as for all of the above. In different ratios, you use different profits. All of the above, my dear children. Which of the following limitations of ratio analysis are limitations? Historical analysis ignores qualitative factors. A is a limitation. It's based on historical data. It doesn't talk about what is going on right now. So A is a limitation. Ignores qualitative factors. B is a limitation because ratio analysis talks only about quantitative information. Ignores quantitative analysis. That is not right. We only do quantitative analysis and ratio analysis. Ratio analysis and false and variation in price levels are not considered. That is true. D is also correct. So A, B, and D. A for apple, B for boy, and D for dog are the correct answers. So B for ball is the correct choice. This ratio measures the extent to which long-term borrowings are covered by assets, which indicate the margin of safety available to provide for long-term borrowings. Long-term borrowings கொடுக்கிறதுக்கு எவ்வளவு கையில காசு இருக்கும் அப்படின்றத கண்டுபிடிக்க உதவுறது என்னது அப்படின்னு கேட்டிருக்காங்க. Current ratio, debt equity ratio, total asset to debt ratio, proprietary ratio. Definitely not current ratio, debt equity ratio, total assets to debt ratio. I have so much of total assets, I have so much to pay them. So I have so many assets to sell and pay the debtors. அப்படின்னு சொல்றது வந்து C. Total asset to debt ratio. Exactly, my dear children. 26. The ratio is generally treated as an indicator of a sound financial position where the assets are largely backed by shareholders' funds. Shareholders' funds தான் அதிகமா இருக்கு, டெட் கம்மியா இருக்கு. அசெட்ஸ் ஆர் லார்ஜ்லி பேக் பை ஷேர்ஹோல்டர்ஸ். ஷேர்ஹோல்டர் கொண்டு வந்த காசு வச்சு தான் அசெட்ஸ் உருவாகி இருக்கு, டெட்டை வச்சு கம்மியா தான் உருவாயிருக்கு அப்படின்றது எது சொல்லுது அப்படின்னு சொல்றாங்க. டெட் ஈக்விட்டி ரேஷியோ, கரண்ட் ரேஷியோ, ஆசிட் டெஸ்ட் ரேஷியோ. டெட் ஈக்விட்டி ரேஷியோட ஃபார்முலா பார்க்கலாம். இட் இஸ் டெட் டிவைடட் பை ஈக்விட்டி. Current ratio is current asset by current liability, is not at all concerned. Asset ratio, quick asset by current liability, not bothered about which one is backing the assets and all. Proprietary ratio is equity divided by debt plus equity or equity divided by total assets. So total assets la evlo on the equity irukku அப்படின்றது சொல்றது தான் proprietary ratio, and that is the correct answer. 1 second, my dear children. All right, continuing. 27th question. 27th question is, which of the following ratios is most important in determining the long-term solvency of a company? Long-term solvency, debt equity ratio. Because profitability ratio is profitability. Stock turnover ratio is activity. So long-term solvency is debt equity ratio. Which of the following accounting ratios is shown in its pure form? Pure form na 3:4, 5:1. Current ratio, net profit ratio is shown as a percentage, data turnover ratio is and inventory turnover ratio is shown as number of times. Current ratio only is shown as a pure ratio. There's 2:1, 3:1. Which of the following accounting ratios is expressed in terms of percentage? Operating ratio is expressed in terms of percentage, debt equity ratio, number of times, liquidity. No, pure form. Liquidity ratio, pure form, data turnover ratio, number of times. percentage na operating ratio. Which of the following accounting ratios is used for knowing the long term financial position of the business? Debtor turnover, fixed assets turnover, return on investment, profitability. Debtor and fixed asset turnover ratios are activity ratios. Proprietary ratio only talks about solvency of the firm and long term. So proprietary ratio is the correct answer. In which of the following accounting ratios, cost of goods sold, cost of revenue from operation is taken as numerator? Inventory turnover ratio. Inventory turnover ratio is cost of goods sold divided by average inventory, or cost of revenue from operation divided by average inventory. Total asset to debt ratio is a solvency ratio. Yeah, solvency ratio. It's not profitability, activity, or liquidity. Which of the following already repeated question 33, 34. Higher the ratio, the more favorable it is. Does not stand for operating ratio. Repeated question. Which of the following is expressed as a pure ratio? Inventory number of times, quick ratio, pure ratio. 2:1, 3:1 அந்த மாதிரி quick ratio தான் சொல்லுவோம். Gross profit ratio, percentage. None of these will not come. Quick ratio. Dash of a business means a business is in a position to meet its short-term financial obligations. Liquidity of a business only talks about short-term financial obligations. Activity ratios are ratios that are calculated for the measuring the efficiency of the operations of business based on effective utilization of resources. True. Current ratio and quick ratio are liquidity ratios. Both A and R are true, but A is not the correct explanation of R. If debt equity ratio is 1:2, it is considered to be safe. From security point of view, capital structure with less debt, more equity is considered favorable as it reduces chances of bankruptcy. A is true. Debt equity ratio 2:1 வர வரைக்கும் we are safe. And security point of view, ஏன் safe அப்படின்னா கம்மி debt more equity இருக்கும்போது bankruptcy வந்து கம்மி. Bankruptcy is not a problem. So 38 is A is assertion is and reason are correct, and they are both the correct explanations of each other. Reason is the correct explanation of assertion. Ratio analysis is an indispensable part of interpretation of results revealed by financial ratio technique, which involves regrouping of data. Already checked, already told, repeated question. Which of the following ratios show how efficiently companies' resources are utilized? Activity ratios. Operational efficiency, how efficiently companies' ratios are utilized, how soon it gets converted into revenue or cash, or all activity ratios. A transaction involving a decrease in debt equity ratio and increase in current ratio is okay. Issue of debentures against, let's just write the formula of both the ratios and it'll be easier for us to check that way. Debt divided by equity is debt equity ratio. Current asset divided by current liabilities, current ratio. Issue of debentures against the purchase of fixed assets. In an issue of debentures, debt increases, so debt equity ratio will increase, but you're issuing it for fixed assets, so you're not getting current assets. So that means current ratio will remain the same. So this is not the correct answer. Redemption of debentures, redemption of preference shares for cash. When you're redeeming preferences, equity will reduce, so debt equity ratio will increase, but then cash will also reduce, so current ratio will decrease. So decrease in debt equity ratio and increase in current ratio கேக்குறாங்க. This will increase, and so obviously this is not the issue of shares for cash. When you issue shares for cash, equity will increase. Debt divided by equity, equity will increase. When your denominator increases, debt equity ratio will decrease. And when you're issuing shares for cash, you'll get more cash, so current asset will increase, and therefore current asset divided by current liability, this will also increase. So this decreases and this increases. So C is the correct answer. Issue of debentures for cash is, let's just check. Current asset increases, debt increases, so both the ratios will increase, but they're asking for decrease in debt equity and increase in current ratio. So C is the correct answer. Understood, children? All right, moving forward. The dash indicates the percentage of each sales rupee remaining after the firm has paid for cost of goods sold. Revenue minus cost of goods sold, gross profit. Gross profit ratio, gross profit margin is the answer for எவ்வளவு பணம் மிச்சம் இருக்கும் காஸ்ட் ஆஃப் குட்ஸ் சோல்ட் வித்ததுக்கு அப்புறம் அப்படின்றது எந்த ரேஷியோ சொல்லும் அப்படின்னு கேக்குறாங்க. கிராஸ் ப்ராஃபிட் ரேஷியோ சொல்லுவோம், பிகாஸ் காஸ்ட் ஆஃப் குட்ஸ் கழிச்சு காஸ்ட் ஆஃப் குட்ஸ் சோல்ட் கழிச்சா நம்ம கையில இருக்கிறது கிராஸ் ப்ராஃபிட் ரேஷியோ. Selling price is fixed at 25% above cost. Gross profit ratio is selling price is 25% above cost. So the percentage is applied on cost. So cost வந்து 100 assume பண்ணிக்கோங்க, your gross profit will be 25, your sales will then be 125. So gross profit ratio, gross profit divided by sales, 25 divided by 125, which is 1 divided by 5, which is 20%. D is a correct answer, my dear children. Moving forward. All right, last 3 questions, my dear children. Which of the following ratios is expressed in times? Inventory turnover ratio. Only turnover ratios are expressed in times. 45, the limitations of repeated questions. So 45, we're going to skip. 46, interest coverage ratio expresses the relationship between profits available for payment of interest and the amount of interest payable. It is profits available for interest, that is profit before interest and tax divided by interest on long-term debt. So A is correct, assertion is correct. Higher ratio ensures lesser safety. No, R is wrong. Higher ratio ensures higher safety for debtors, for interest on debts, because more profits available to cover interest is better. So reason is wrong, assertion is correct. That will be the choice for you. With that, we have come to all the question, end of the questions of ratio analysis. One lengthy process for me, definitely. Hope I could help you in some way with respect to ratio analysis. The case study questions are there. We will be looking at case study questions also very soon. We have solved a lot of questions, I should say. If you're well versed with these questions, you should be able to answer all the questions. By God's grace, you will be able to. In case you have any questions or you have any specific ratio analysis questions that are difficult for you to solve and all, you're free to send it to me, comment, and I'll definitely look at it and solve them. You people have fun. In the next class, we'll be continuing with partnership, and we've completed till interest on drawings in partnership. The next thing to do would be to solve questions based on capital accounts and P&L appropriation accounts of partnership. That also we'll be doing. You people take care, have fun. If you haven't subscribe, share with your friends so that they'll also be useful. It'll be useful for them also. Bye, my dear children.